If you're looking to establish credit through banking, you've come to the right place. Building a solid credit history can seem like a daunting task, but I'll break it down in a way that'll have you on the right path in no time. And trust me, I've seen firsthand how the right banking strategies can make or break your credit journey. Now, let me give you a quick sneak peek of what's coming up. There's one key element in this process that most people overlook, and it's going to save you time and headaches. Stick around and I'll tell you exactly what that is. When it comes to establishing credit through banking, the first thing you want to do is understand the role of credit accounts. A credit card is your first real tool. But here's the thing, you don't want to just grab any card. Choosing the right one can make all the difference. And I'm not just talking about high limits or rewards. Look for cards that report to all three major credit bureaus, Experian, Equifax, and TransUnion. This is crucial because the more places your activity gets reported to, the faster your credit will grow. I've seen clients struggle because they signed up for cards that only reported to one or two bureaus. This mistake cost them months of credit building progress. Next up, using credit responsibly. And I can't stress this enough, paying your bills on time is key, but did you know that maintaining a low balance relative to your credit limit is just as important? This is called your credit utilization ratio, and it's a major factor in how your credit score is calculated. Ideally, you want to keep it below 30%. This means if you have a $1,000 limit, you should aim to use no more than $300. It sounds simple, but many people miss the mark here, letting balances balloon past what's manageable. Now, if you're serious about building your credit, there's one more thing that most people forget about, and it's where you'll see the most impact, and that's making sure you're on the right type of credit agreement. For example, secured credit cards are a great tool for those just starting. You put down a deposit, and that becomes your credit limit. It's a win-win. You build credit while mitigating the bank's risk. The key, though, is consistency. Use the card regularly, keep that utilization low, and pay off the balance in full every month. But it doesn't end there. You've got to track your progress, and I'm not just talking about checking your credit score once a month. Get in the habit of reviewing your credit report regularly. There are free services available that will give you access to all three bureaus. This is where most people fail. They don't catch errors or inaccuracies that can lower their score. Believe me, I've had clients come to me frustrated because they didn't realize there were negative marks on their credit reports that weren't even theirs. Here's the kicker. When you've built a solid foundation, the banks start to trust you more. You'll qualify for better loans, lower interest rates, and higher credit limits. It's a snowball effect, and you want to start it as early as possible. One thing that I always make sure my clients do, and something I personally recommend, is building a diverse mix of credit. This could mean adding an installment loan or a car loan into the mix once you're comfortable managing credit cards. This helps your credit score by showing that you can manage different types of debt. It's like leveling up your credit profile. Now, before I wrap this up, there's a secret I promise to share with you, and this is something that not many people realize can speed up your credit building process. It's all about authorized user status. If you can get added as an authorized user on a family member's or a friend's established credit card, you can inherit their positive credit history. This doesn't always work in your favor, but if they have a low balance and a solid payment history, it's like hitting the fast track for your credit. If you got value from this video, make sure to subscribe to support content like this.